want an exposure to a market or an
Everything they need in one place.
The world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, 3 Stock Tips. I'm Emma Wall and here with me today is Rebecca Edelman of the Neptune US Income Fund. Hello Rebecca.
Hi Emma.
So what's your first stock tip?
My first stock tip is a company called Limited Brands, and this is a retailer who own Victoria's Secrets and another concept called Bath and Body Works. And these two concepts, Victoria's Secrets, obviously the intimate apparel, are both market leading. So they've got 25% market share approximately in the US market. They're also two very strong brands. Customers love them. They've got good customer loyalty. That gives them pricing power. That gives them a very solid base domestic business. But what's really exciting about Limited Brands at the moment is they're expanding into new markets. So they're launching swimwear, they're launching activewear, this range called Pink, which is targeted to the younger audience. So again, we see there's big growth opportunities domestically in the US retail market. Longer term, however, they're expanding internationally as well. And that's the really exciting long-term part of the Limited Brands story. They've got about 4 stores now here in the UK. They're looking at expanding in the Middle East, looking at Hong Kong. It's a very underpenetrated market. And with such a strong brand like Victoria's Secrets, we think it's going to do very well in the future.
What's the risks then? Because some retailers, as we saw, although slightly different market, but Tesco overstretching itself with trying to expand globally. Is that a risk?
Well, I think that's very interesting because the difference between, say, a Tesco's and a Limited Brands is Limited Brands has been very cautious with their international expansion. They're not just going up, opening up stores here, there and everywhere. They're being very selective with locations, very selective with markets and really going at a very measured pace. And we like this kind of careful management.
And what's your second stock tip?
My second stock tip is a company called Las Vegas Sands, so a casino operator. But it's not about Las Vegas, it's all about Macau. So over 50% of their profit comes from Macau. Now, as most of us know, the Macau market is booming. For whatever reason, Chinese love to gamble. So the demand is so strong, but at the same time, you've got a very limited space. Only in Macau are Chinese allowed to gamble. So just to give you an example, last week it was Golden Week in China. And in their property there, they had 1.5 million people going through that property in a week, which is quite a phenomenal number of people gambling just in their one property. At the same time, they're opening up new properties. They've got a new Parisian resort with its own replica Eiffel Tower, which they're currently building in Macau. And then they're also looking in the future at properties potentially in Japan. Even in Spain, we might see a Euro Vegas at some point in the future. So it's a great, great growth story. But at the same time, it's a company that's committed to returning cash back to shareholders. So it pays a nice regular dividend, which is growing at a very healthy rate. But also we expect them to pay a special dividend in the 4th quarter of this year, which will give them a yield of around 7%. So a really nice growth and income story.
Is that sustainable given how small Macau is?
Well, the amazing thing is because the Macau's so small and the demand's so strong, they have so much pricing power. So year on year, they're able to put up the minimum bets on tables. The Chinese consumer, as I said, just loves to gamble and they're willing to pay more and more to do that. So it gives them just this great pricing power, as well as the other properties, which will give them that volume growth in the future.
And what's your third stock tip?
My third stock tip is a company called CME, so Chicago Mercantile Exchange. It's a financial company. We like the financial sector at the moment. But it's a business where traders will trade options and swaps and future contracts. But the big secular growth driver for this is traders, because of regulation, are increasingly having to trade on an exchange rather than just over-the-counter transactions. So a lot of volume is moving onto their exchange. At the same time, it's a very asset-light business, so they generate a lot of cash flow, and again, they return that cash flow back to shareholders in a meaningful way. So long secular drivers as well as a nice income story.
A lot of people are nervous of financials, though. What are the risks with this stock?
Well, I think the biggest risk is what's happening in terms of financial volume, so the amount of equities that are being traded, the amount of fixed income that's being traded. Volumes have been pretty low since the financial crisis, but actually in the last few months, as you've seen the health in equity markets, as you've seen stock prices rise, you've actually seen volumes start to pick up again and again. And you have to remember that this is a very profitable business. In fact, they make a 90% incremental margin for every extra bit of volume that's traded on their exchange. So really, you've got nice leverage into rising financial markets. So we actually think this is a bull point for the stock at the moment.
Rebecca, thank you very much. This is Emma Wall for Morningstar. Thank you for watching.